Well, Susie, the major averages began the day sharply lower, disappointing earnings and outlooks, but with help from Janet Yellen and signs that Russia's President Putin may now be looking to ease tensions over Ukraine, the Dow and the S&P 500 battled back from those early losses to notch their biggest gains in 3 weeks. The Nasdaq, though, well, it was lower throughout the session on a sell-off in internet, technology, and social media stocks like Twitter. It lost another 3.7% today. At the end of a choppy trading day, the Dow was 117 points higher. Nasdaq lost 13, but at one point it was down 50, so it too came back, but just not enough to go into the green. The S&P added 10. Now, while most stocks did end higher, some names you know got hit hard. Dominic Chu takes a closer look.
For weeks now, investors have been taking money off the table when it comes to stocks that have had tremendous upside runs. They're also known as those momentum stocks. Today, we saw some dramatic single-day sell-offs. Take upscale grocery store chain Whole Foods. It's said that sales in stores open at least a year grew at a slower pace than expected as competitive pressures picked up. As a result, Whole Foods cut sales and profit forecasts, and the stock lost around a fifth of its value. Then there's cybersecurity firm FireEye. The once high-flying company said that losses for the current quarter would be worse than previously thought. The stock lost a quarter of its value. Then there's AOL. The online media and entertainment company reported a bigger drop in profits than Wall Street had been expecting. AOL is in the middle of a turnaround effort and has been shutting down underperforming units and investing in its advertising business. The shares lost around a quarter of their value as well today. Of course, when stocks drop that much in value in such a short period of time, some investors use it as a buying opportunity.
A lot of these companies, importantly, are reinvesting aggressively in their businesses, which is holding back earnings and cash flow, and I think in a lot of cases making them look even more expensive than they are. And a couple that are kind of cases in point there are Amazon and LinkedIn.
The bigger concern is whether or not this kind of selling will carry into other parts of the market.
There's no need for the retail investor at home who's invested in non-high beta momentum type of names to have significant concern.
Some investors are taking comfort that while there are sell-offs in certain stocks, it's not happening across the entire market. And they'll point to the fact that we still remain near record highs for the Dow and S&P 500. For Nightly Business Report, I'm Dominic Chu.